All right. Matt, the mortgage guy, and I'm going to talk about mortgage interest rates today. I'm going to talk about what's happening with mortgage rates, what I expect to see in the future in mortgage rates. And like it or not, I am going to urge folks who have not refinanced yet to do it. I am calling last call. I know I've stated it in the past, but I really, truly believe that this summer is going to be the greatest time for people to refinance. And if they don't, they are going to regret it. So before I jump into it, please like, comment, subscribe, do all the stuff you do for the YouTube algorithm. I appreciate it. Everybody who makes a comment, everybody who likes the video, everybody who follows the live stream, I greatly appreciate each and every one of you. So continue to do so we can spread some good information to as many people as possible. So woke up today and, saw rates getting worse. And it just, when it's red, and this means rates are getting worse over here when the mortgage-backed securities number is down in red, it always gives me a little bit of a scare. I've seen markets shift. I've seen late 2018. I've seen February 2021, where we can see quite a bit of shift in a short amount of time. And for people who are on the fence about refinancing, I have firsthand experience with people who live with regret, or people that call me a month later and go, dang it, I wanted to, I wish I would have. Do we think we'll see those low levels again? And so this video is simply to let folks know rates are extremely low. If you were thinking about refinancing, the 50 basis point gift that you got last week when FHFA removed that adverse market fee, that coupled with a little bit of market betterment, if that's not reason enough to get the app in, to get the docs in, to get the refinance done, I don't know what is. Because I've said it before, but for anybody who hasn't heard it, mortgage interest rates are low because the Fed is buying gobs. And when I say gobs, I'm talking $100 billion a month in mortgage-backed securities. It's no secret that as soon as they start tapering back their purchase of mortgage-backed securities, rates will go up. And they don't even have to start doing it, to be completely honest. A lot of economists, a lot of people who are close to this and follow this will tell you that the Jackson Hole meeting, where the Fed meets in Wyoming in late August, is where they all think that the Fed will come out and tell people their plan, because they get together at this conference over these 3 days and they discuss, and then they make statements. And if Jerome Powell comes out and says, you know what, the economy's ripping and roaring and we see a bright future and we're going to cut back, we're going to taper our purchase of mortgage-backed securities, that is going to have a dramatic effect on mortgage rates. I mean, it's that simple. You don't have to overcomplicate it. You don't have to, trace, Fibonacci levels and look at the 10-year treasury and stuff. Just as the Fed buys less mortgage-backed securities, the price needs to increase so they can find other buyers who are going to buy it, because other people aren't buying it when it's as low as it is. I just want to go through this because people like to see this chart, and I've got good feedback on this chart. Let me move my head out of the way. This is just a chart that goes back, what is that, 90 days? And so the higher we are on here, the better the rates. Look at this, Alert to Lock by my buddy Barry Habib. This is today, July 21st. But I always like to just give you a little bit of color and simplify it, because I know folks like things in simple fashion. Back here, this is the end of April. Let's call this on a 30-year fix with perfect credit. Let's call this 3.125. Then they get better to 3%. Then they get worse to 3.25. Then back to 3%. Then 3 1/8. Then 2.875. And then June, it was June 16th where we got really nasty. Boom. Some lenders, all lenders are different and all pricing is different based on your scenario. Some lenders were all the way in the mid threes on a 30-year fixed. So that was one short month ago. And look at this run we've had. Amazing run. And then a little bit of a pullback and then some more amazingness. Coupled with, if it's a refinance deal, you got an extra 50 basis point gift from that adverse market fee coming off for all refinances. If you don't know about that, Google it. FHFA removes adverse market fee. Basically, refinances got 0.5% cheaper. If it's a $400,000 loan, it got $2,000 cheaper. Up here, these 30-year fixed on a perfect scenario with no points being paid, it's probably 2.625. So as you can see, it's volatile, but it only takes a dip like this followed by another dip like that. And I'm telling you, you think this from 2.8 to 3.5 was dramatic over this 1 week period. Wait until the Fed starts talking. Wait until the Fed starts actually tapering, starts reducing what they're buying in mortgage-backed securities. This will look like, a kiddie ride. So as much as I don't like some marketing I see out there where it's like, experts urging people to refinance this summer. I'm urging people that if you like it, lock it. If you've got an opportunity to refinance where it's going to pay itself back in less than a 24-month period, do it. Don't wait. I see it too much in my own business. And so I'm talking to everybody, no matter what state you're in. I only do business in California, but inside of my business, I talk to people all the time. And, I got busy. Sorry. It's an application. It's a few docs. It's a pretty easy process for most people. And it's going to save you thousands of dollars that can go towards other things, that can go towards paying down higher interest debt, that can go towards sending a kid to college, that can go towards family vacations, goes towards anything except for paying extra interest to loan servicers that don't need the extra interest, right? So that is my message and that is my story, and I'm sticking to it. I still see mortgage rates 3.25 to 3.5 by the end of the year. And I think the big catalyst is this Jackson Hole meeting that is August 26th to August 28th in Wyoming, Jackson, Wyoming. Jackson Hole. That's when the Fed's going to get together. They're going to talk, and we gonna see. That's my new catchphrase. We gonna see, because we don't know. I can give you my advice, I can give you my opinion, but none of us know. So we gonna see. If you're in California, feel free to reach out, matt@mattthemortgageguy.com. If you're outside of California, go to Great Mortgage Broker. I'll connect you with a mortgage broker I like and trust. Thanks for watching. I appreciate you. Until next time.